April 4th, 2024. I wouldn't really worry about it if you missed most of this giant crash. This is really unusual for something like this to happen. And, I was short. I got short earlier in the day and I exited all my shorts at the prior day's high. So I exited all my shorts here. And, I didn't want to sell this bar. I thought it was just way too climactic. And, every once in a while, you'll just get something like this and this will just happen. But I think that betting on this is just in general going to be a losing strategy. And even if you were brave enough to sell 56 or 57, you got to be trading really small for sure. And you're probably exiting above 59. And I don't see a world where I'm selling 60 after I see 59. And if I am, I'm probably getting out as 62 is bouncing. So, this is just going to happen every once in a while. I wouldn't really worry about it. It's pretty unusual price action. And it's more fun to watch than it is to really trade. This is entertainment. Because usually this isn't going to happen, right? Again, if you look at, I have to I have to do this to make it smaller. But the daily range, going into bar 42 is 15 and a half. And so, it's a pretty small range of the day. So it's reasonable, I think, at this point to think the range might double. So it's good to be looking for a breakout or maybe even triple if you're lucky. But, when I was short, I thought that yesterday's high was my long shot profit target essentially. And we ended up getting there and I got out and I just, I don't trade stuff like this. I think it's just impossible. It's a little bit impossible to predict that you're going to have an 115 point range when you're, the range is going to multiply by 8. And, maybe I'm dumb, but I just don't think that this is really worth trading for the most part, because unless you're trading very, very small position size. So this happens, maybe twice a year where you get something that's this extreme. And it's cool when it happens for sure. It's fun to make the chart and put it in my, my little encyclopedia. But yeah. Anyways, big gap up, a bull doji on bar 1. It's not all that great. I wouldn't really buy it. I wouldn't really sell it. It is follow through for the bulls, though, at least the bare minimum. So if you were long, it is follow through and you're always in long for the bulls. Bar 2, a bear bar closing kind of near its low, but not quite on its low. So I would just be flat here. I think it's, what the bulls want is some sort of pullback towards the moving average and then a reversal up. And the bears want, it's hard to say the bears want a reversal up now. They obviously want a bear trend from the open, but if in my mind, if I was going to short, I wanted to bounce to around the day's high and then a reversal down. The reason I was looking at the prior day's high was because we were in a trading range. We got a gap up to the top, and I thought this would be a magnet, and we might try and close the gap. It's amusing that I have to zoom the chart in so much. That's all. 3, an inside bar, probably buyers below. It's a low one short for the bears. Probably not going that much lower. Bad follow through for the bears on bar 4. You can see buyers below. And a bear bar closing near its low, bar 5. It's possible second leg trap, the gap up, and then 2 legs down. So it could be a second leg down. But this is a relatively tight bear channel. And if you'll notice, we haven't traded above any of the prior bars so far today. So while bar 6, you could argue it's a high 2. I don't have a problem with that. But it definitely could also be considered a high 1. And you could be buying looking for the second leg up from the gap. But this channel down is just really tight, so I'd rather not. Bad follow through on 8, a tail on the top. You can see the bulls bought below 4, scaled in lower, and they're making money. So limit order bulls are making money. 8, a reversal up. It's possibly a second leg trap, something like that. Doji bar 9. I wouldn't buy above 8. I think too likely that, again, we're going to get a deep pullback from how tight this channel is. Disappointment bar on 9. Then 10, an outside bar. 10 is maybe an okay swing sell, but it could be a third push down and you're selling in the middle of a tight trading range. It's really not all that great. You do get good follow through on 11, but again, tail on the top, failed breakup below yesterday's low. There were bulls buying this low because they bought below here, scaled in, made money. If they bought below here, scaled in, made money. What do you think they're going to do here? They're going to buy below here. They probably didn't really even have to scale in, and they made money. 12, a reversal up. So you can see bulls getting stronger, right? Having to scale in less and less. Reversal up 12, second leg down 13. Maybe you sell 13 again for always in. Maybe it's an okay sell, but I'd probably want it to close on its low. But I don't know if I don't think it's the worst sell in the world betting we're going to get to the moving average. 14, a reversal up. Do you buy above 14? Maybe you're buying in the middle of a trading range, but I do think we have to get to the moving average first. So that was the only thing that bothered me about 14. Had we, gotten to the moving average, then maybe it's reasonable. What you want to see is some sort of failed breakout below this trading range and then a reversal up, essentially like we got. Thought the channel down was relatively tight, so kind of hard to buy, but definitely reasonable to get long in here. 15 follow through for the bulls, but I still think the bulls need one more good bull bar before we're going to rally, and that's not it on 16. It's just a doji bar. 17, a bear bar closing somewhat near its low, but not worth selling, and then an inside pattern, 18, 19. Breakout below the II 20, 21, but we're just at the moving average at this point. It's a wedge, 6, 11, 21, and an inside bar, 22. So a low one right at the moving average. You're selling right at support deep in this channel, so not very good. 23, failed breakout below the 18 bar range. We actually went below the 18 bar range, above the 18 bar range, and then back below the 18 bar range, which is extremely rare, which is pretty cool. But anyways, good bull bar 21 or 23 and follow through on 24. Can you buy above 24? Yeah, definitely. I think it's okay. I think the problem is you're probably going to get some sort of sideways pullback. So I think if you're buying here, it's very likely you're going to sit through some sort of pullback, and you just have to do it and deal with it. It is what it is if you get it. But anyways, follow through 25, 26, 27, 27. 27 looks parabolic. It looks like a breakout kind of above a channel, but it's still by the close, still okay to be long. We can see we're at the top of the bear channel, so spike, pullback, channel, and we're at the top of it on bar 10. So that's what we're trying to break out of on 27. So you can buy up here, but it's a bit difficult to do. You'll have to exit below any bear bar. Doji bar 28, but bulls by the close, follow through 29, inside bar 30, maybe a buy above, but possibly it's a high one and you're relatively high in a bull trend, but it's still in the spike phase, so it's okay to take high ones. Good bull bar 31, and then extremely climactic bull bar 32, breaking out of the 18 bar range. Bulls, they know they're probably going to get profit taking soon, but they're hoping it's not going to be some bigger bar. They're hoping it's going to be more sideways, and then we're going to continue up to yesterday's high. Instead, 33, disappointing bear bar. It's a parabolic wedge, but probably a minor reversal. Parabolic wedges are always minor reversals. They can turn into major reversals, but they probably have to go sideways first, like we saw here. 34, follow through for the bears, but probably still going to go sideways before we go too far down. More follow through 35, so 3 straight bear bars, but not that great. Inside bar 36, probably buyers below. High 2, essentially 38. Or high 1, this is still a 6-bar micro channel, but tight trading range. If I'm going to buy, I want to buy lower after a deeper pullback. And if I'm going to sell, I want to sell higher after a deeper pullback. So I don't want to do anything in here. You can see we get a failed breakout above the tight trading range and then an attempt to break out below the trading range. But you can see 42, 43 could be 2 legs down on 42, up on 42, down on 43. So looking more sideways. Do you buy above 44? I think you can buy above 44 for a swing. I don't really have a problem with it. First close below the moving average 42, so it's possible we end up bouncing back to the 32 close. I think the channel down from 33 to 43 is relatively tight, but I still think okay to buy above 44 as for a swing, and just hoping we start to channel higher or something like that. Interesting, we're probably not going to go straight up is my point, but we might test the 42, 41 high, since it was not the worst thing in the world to buy the close of 41. Any, decent looking bull bar is going to be a magnet. But interesting math on 45. You can probably sell 45 for a swing, but if you bought above 44, you also probably can still remain long. So I think on 45, when it closes down there, it's okay to be long or short here. Follow through 46, 47, 48. When you get 48, you can see this is starting to get climactic, but this could be an endless pullback. Occasionally, you are going to get endless pullbacks. Some traders wait for the breakup before they start to trade it. Some traders are just holding their trade. But this could definitely start to become some sort of endless pullback here. Then 49, follow through for the bears, a good bar. And then an inside bar low 150. Surprise 51, 52, but big tails. But inside bar closing near its low 53, so good for the bears. And then, we more or less just got this for the remainder of the day. Again, I think it's funny that, even from the low 1, if you sold it and walked away for a few hours, kind of insane that you could have made like 100 points. But anyways, big follow through 54, 55, 56, 57, 58, 14 bar streak. The only other time I've seen that kind of streak, let me hold on. I don't have it pulled up, but May 3rd, 2023, if you want to go look at it, we had 23 straight bear closes in a row on the open of the day, which was pretty interesting, and obviously extreme and unusual. But 14 in a row, pretty extreme here, pretty unusual. if I'm short for any reason, I think that you're pushing your luck in general. Again, I think that a lot of times, this ends up forming some sort of trading range. I was all for the endless pullback. It was reasonable to see it coming. I think once we started to get those bear bars, but I thought that yesterday's high was probably going to be, it, and then we might bounce for a couple legs, and then maybe try to get another leg down, something like that. But I guess sometimes these endless pullbacks can be relatively violent. But this is obviously very extreme. We got a big spike. Even if you went from the top of the move all the way to the bottom, we even got that measured move. It's kind of, 33 is a good example of a parabolic wedge, obviously. Here, 1, 2, 3. And then we start to go sideways. And again, if you hold and you just keep your stop above here, sometimes with parabolic wedges, they will turn into major reversals. Not they never turn into this, but you should never bet on one turning into this. Obviously, they sometimes do. But obviously a ton of follow through for the Bears. If I exited above 59, which I would, if I was short for any reason, I'd be trailing a stop above any bar at this point. And these bars are huge, especially compared to what we've had so far today. These bars are huge, so hard to stay short. Obviously, big outside down day, and I would exit here, and I probably wouldn't sell again. You could sell against 60, but I would sell super small. And there's not really a reason to exit if you sold again, but just difficult. You don't really have to exit until 75, but I just personally choose not to really trade this. Huge outside down day, obviously, 115 point day. The end of the bull trend for sure. So this is probably over with this, and I think we're going to go sideways. Now, how far down are we going to pull back? I'm not sure. We had a buy climax here, and we tested the bottom of it, but this was such a big bar that testing the bottom might have been the might not find too much support here because this completely undoes these two. So not sure how much further down we're going to go. We'll see. But at some point, I don't think we're getting like all the way down here, but we're probably going to get, this is strong enough for at least a second leg down, if not, 3 legs. But at some point we're going to start to go sideways here for, I would imagine, I don't know, 30 to 50 bars, probably something like that, maybe 20 to 30 bars. And then most likely get a second leg up or, start a downside breakout. But problem with my downside breakout is the monthly chart with how strong this has been. I don't think that we're just going to reverse this whole thing. Bulls might exit and we might get a couple legs down. I'll be interested to see if we can test essentially, down here. But I think that this is ultimately going to get some sort of second leg up. And obviously, oh wait, I got to go through the stop orders. I'm obviously, rushing through this a bit today. I'm just I think I'm taking the night off of studying because I've just been doing a lot lately and I'm pretty tired. Probably could have sold, I don't know, maybe 13. You maybe could have bought 14, but I would use a wide stop if you're going to do that. 24 is good by the close, 27, 31. You can maybe sell 33 or 34, but difficult, I think. Okay, buy above 44. Okay, sell below 45. And you could sell 48, 49, 50, 51, 52, 53, 54, etc. All the strong bear closes in the strong bear trend. And that's it.